Okay, let's start today's session. So first of all, I would like to ask if anyone has any questions before going to today's session. Does anyone wants to ask any questions?
बात है मैराथन है कि हमने पहले राजनीति देश के लिए तो योगदान नॉर्थ ईस्ट जैसे इलाके थे पूरे देश
Uh, as there are no questions, we'll start with charts. I'll share my screen. Is my screen visible?
Yes, sir.
Yes, sir.
Yes, okay. So this is a chart of Sensex options, today's expiry. This was call of 3,600 strike. So if you trade options on expiry, most of you know that out of the money options will go to zero. In the money options will have some value, but out of the money options will have zero value. And on expiry day, extrinsic value is zero. If options have some premium, that is intrinsic value. I have shared videos of options on YouTube. So if you want to understand basics of options, you can watch those videos. But a basic properties option has to go to zero if it is out of the money. At the money options have very minimum value.
Sir, your voice is cracking up.
Totally intrinsic value going to zero. They are likely to go to zero. Therefore, it is better to sell options instead of buying options. Okay. So in this chart, what is the options trade I have taken?
You have sold the call of
You
Sensex
can see this.
85300.
83,600 call.
Ah.
Okay, you can see at the top here on the left side 83,600 call. Okay. So when market opened at 9:15, after that what happened? Earlier the color was green, it turned yellow, which was bearish sideways, bullish sideways. With this bullish sideways, we can see there is a red band appearing.
Yes, this was the first sign of red band appearance.
My internet had disconnected. Am I audible now?
Yes, Bhau.
Yes, sir.
So you can see this red band. That red band means the bearish bias has started appearing. There is this black color band as well. Yesterday itself, the candle color changed to yellow, and bearish momentum band and bearish bias band had appeared, but they were thin. So having thin band means that is slightly less bearish, not very strongly bearish. Whereas there was a bias band present. So this bias band acts like a strong support. Internet it is getting disconnected repeatedly. I don't know what happened. Okay, so this
So
bias
which tool is
band
there?
is present as a red band. This green thick bias band was also present, and thick green bias. Morning, what happened? Prices closed below that. So as soon as price closed below that, the color also changed to red. This is a downtrend. Color change to red is a downtrend, and what happens here? Just a minute, I will change the internet. It's getting disconnected repeatedly. Okay, I think now it should not have any problem.
बघता त्याच्यावर
Others who
हा.
are not in the meeting, please keep your phone muted. If you are not speaking in the meeting, keep your microphone muted. Okay. Do we take position at 9:15 candle or there is a confirmation pattern? If you take a candle, this candle entry is taken at 239. This is a candle close. At this time, where is the stop loss? It is here, 484. I'll keep everyone muted. I will not allow anyone to. I have kept everyone mute. Okay. So I will not allow anyone to speak in between. But if anyone wants to ask any question, they can unmute me. They can raise the hand. I will unmute. Okay. So the how the strike was selected. I had checked how many options are there and which options are closer to the strike, and I selected uh, from at the money upwards. So at the money and out of the money options, 5 strikes. All were analyzed and kept on the chart. So this was the opening candle. It closed at 240. The color changed to red. So if we sell here, the stop loss is here. Perfect stop loss where we should exit the trade. That is here. And risk reward is very small because 240 is entry for a 480 is stop loss. It is just 1:1 risk reward. So I do not take this kind of trades. I just let it be. But after that, what happened? Prices came down, went up, again it came down, again went up, again it came down. At this time, this is around 10:30. Okay, before 10:30, there is no red band, but there are some sell signals present. So if these sell signals are also taken, for this stop loss will be candle close above this band. But I don't like to take entry like this. What I prefer, I'm telling you, I like retracement entry. In this candle, a selling area formed. Okay, there is a continuation printed here and selling area is printed here. So this is a location where I want to sell. I do not want to sell below this. Okay, why do I want to sell at this location? Because the risk is very small at this time. If you notice, the entry is around 141 and stop loss is around 161. Okay, this is the stop loss level. It's purple color. It is at this top 160.75. Okay, so 160.75, above that is the stop loss. If we keep stop loss on candle close basis, that is even better. But sometimes what happens, prices go very far by the time candle closes. So at the best, what I do is, if my stop loss is 161.75, I will keep it at 165 or 166. So we only trade in 0 day to expiry to take benefit of theta decay. No, it can be traded on higher time frames also, 15-minute time frames, and for positional trades also. So that is also possible. But for positional trades, what happens is the overnight risk is higher. Therefore, I usually keep it as spreads. I take entry and I If I short call, I will buy higher level call so that my maximum risk is limited for overnight positions. Okay. So it can be taken as positional trade. It's not a problem. And this is how, if I take a directional trades, it's mostly naked trade during the day. And if I have to hedge it, I will hedge it at end of the day. And stop loss is in the system. So what, this is my entry level, 140 rupees will be entry level, 165, 166 will be stop loss. At the most, twice of this. If this is around 20 rupees, so at the most 40 rupees will be the stop loss. But 30 rupees, uh, 1.5 can also be kept. Okay. Once the candle closes above this, that is exit signal, or it is if it is going above 1.5 times of this stop loss zone, then it is exit. Then when prices kept moving at this time, immediately I will make the order of entry. I place the order to sell at this location, and stop loss order is also kept to buy above this. If the entry gets triggered, that is fine. If it is not triggered, that is also fine. After some time, what happens? Prices went up but could not go into the selling area. And here it again created new sell area. So once it creates new selling area at this location, I get alert that new selling area has formed, and I use this selling area for entry. So this will be entry level 92.75. So below that, slightly below that, we can keep it at 90 or 91. 109.25 is stop loss. So 110 will be the stop loss. We can keep at slightly higher level also. So 115, that can be the stop loss. Okay. And what happened after this? Price went up. It triggered entry here. You can see it triggered the entry. And after that, prices just kept falling. New selling area formed, so we trail the stop loss above this. As soon as new selling area is formed, we know where is our new stop loss. Till that time, we don't have to trail the stop loss. So this is at 44 rupees. Price came down from 90 to 44. It is more than 2 times reward. And if we check the actual risk reward, how much it is, from 16 rupees, it came down by 92 rupees. If we keep this as a stop loss, it is 20 rupees. So at the most 24 rupees. For 24 rupees of risk, we are getting 90 rupees of reward. That is the kind of trade which is possible with this. So I always prefer this in option selling. While doing this thick red band should always be present. Okay, thick red band should always be present, and many times we get entry before 10:30 also. So I had also taken entry in put option, which was far out of the money, 83,000 put. This was 83,000 put. In the opening itself, there was red color and there was a selling area. So what I did was I placed a sell order here at around 61 rupees, and my stop loss was around 80 rupees. So there was risk of 20 rupees, reward of 60 rupees. And price went in. I took entry after confirmation when there were some rejections, because market was strongly down day before yesterday. So I wanted to have more confirmation. Price went in, came down, again it went in, again there was a rejection candle. So I sold around 60 rupees or something, and then stop loss was kept at 81 rupees, and this came to zero. I did not watch this after price came down and created a trailing stop loss. I just entered trailing stop loss of 55 rupees, so that even if my trailing stop is hit, I will have some profit. And if I just keep checking the chart, what will happen? I will exit at this time, and that will be around 34 or 35, 36 rupees, which gives a risk reward of 1:1, which is a fine, good risk reward. It's not bad risk reward, considering this was a contrarian trade, because markets were slightly bearish, but still it went and became zero. Okay. I had shorted one call also on Same strike 83,600. Same call was shorted. It was shorted on 1 minute time frame, and that hit the stop loss. So 1 minute time frame has lot of noise. Okay, I will show that trade. It was around here. Okay, so at this location I shorted a call and stop loss was kept about this 135 and price. It gave entry, came down. 1:1 risk reward was achieved, but after that it hit the stop loss, so I had exited. And if you notice, the bias band was bearish, momentum band was very close to this price, and price was in the selling area. And still it hits the stop loss. It went to create a new selling area after that. This was stop hunting, but it did not go above the momentum band of 3 minute chart, even though it hit the stop loss of 1 minute chart. It came down again. Later on, it gave good opportunity, and I recovered the losses from first trade and made good profits as well. Here also stop loss was hunted on 1 minute. Price did not come here to give me entry here. It came in this area, gave short entry and went down. Okay. And what I do is I add weekly option. I have a separate watch list for that. I add 5 strikes of calls, 5 strikes of puts out of the money, not in the money options. And there will be some options which will give us opportunity. Okay. Some strikes will give good opportunity. So this is 83,500 call. This is slightly out of the money option, and probably it, yes, this also gave opportunity to sell at this time around 1142, around 135. So this is 83,500 core. 83,600 also gave opportunity to sell. 83,700. When the premiums start reducing, then the entry becomes difficult because they are slightly out of the money options. So this out of the money option did not come to the selling area. It did not give entry in the selling area. This one also did not give entry in selling area. This one also not has not given entry in the selling area. So as we move far away from the strikes, the price does not give entry in the selling areas. Okay. And this is 83,000 put. This was far out of the money at the start. You can notice 83,100. What happened? It came down, but price went through this selling area. It touched higher selling area and then it came down. Whereas 83,200, it changed to green color because this is very close to the strike. Prices were strongly bearish in the morning, so it created a green color. Later on, it became red. So out of the money, they are likely to go to zero, and there are lesser fluctuations, lesser hiccups. In the money, have more fluctuations, and there are more chances of hitting the stop loss. So try to take trade in the direction of the trend. If your view is bearish for the day, try to sell calls in the selling areas. If you sell puts, it is likely that your stop loss may get hunted, or out of the money options are better while selling. Okay, so I will allow people to unmute now so that you can ask your questions, and hopefully nobody will make noise in between. This is for options, but this similar principle has to be used for taking investment trades also. Take in the direction of bias, take in the direction of trend and retracement entry. So this is for selling. I prefer options selling because if you notice, there is a buying opportunity, price came down, went up slightly, but it could not continue higher even though prices were falling. But it happens occasionally, not very frequently, that option buying will give very good profits, but option selling gives very good entries and they give very good profits, especially on expiry day kind of setups. I prefer selling options. There is better decay. How do you decide strike? So I check multiple strikes as I explained, and I take out of the money option. Which tool changes candle colors? So I have this indicator TRT plus band. It is a combined indicator which has both things. The bands are appearing, bias band, momentum band, and the candle color is also changing with that. And this is developed by me. But from where to decide to go for call or put? So you have to check the charts of option chain. As I said, I have added all this. So first trade which I took was I sold 83,000 put because it had turned red and it gave me entry as well. So this had turned red and prices went up. So it came down, turned red, price went up in the selling area. It gave me short entry. I sold here and just placed the stop loss. Whether call will work or whether put will work, it's not means we cannot identify that beforehand. Sometimes calls work better, sometimes puts work better. Sometimes both give profits. Like today, both trades were working well. But overall, as you keep trading, your experience will make you understand that whether markets are bearish or bullish or they are likely to be sideways. And what I do is I don't think much. I have a setup. If the price is below bias band, like this is a bias band, price is below bias band, and bias band is upsent, and candle color is red. So if candle color is red, I don't have to think the trend is down. I will sell in the selling area, place stop loss in above the selling area. That's it. I don't have to think much. So this indicator is my personal indicator. The name is TRT Plus Bands, Tape Reading Tool Plus Bands. It's not available in TradingView. You will not be able to search it on TradingView. I have created it. I give access to it. Can we place buy price and stop loss while putting GTT orders? GTT orders I have not used. I use my TRT set tool or order management tools, or simply I just place two separate orders. I will sell, I will place one order to sell and another order to buy. TRT plus band to use, what to do? I am conducting the sessions also. There are free sessions every Sunday morning. So that course is completely free for 6 weeks. Once you go through that course and understand everything, after that you'll during those sessions also you'll be able to understand what is the indicator. This is not just one indicator. There are some more like dual PFI. This is PFI indicator which shows how are the forces, which I don't use for this setup, but I use PFI for taking trades in small caps and mid caps or taking investment decisions. Okay, and mm, there is there are different models. You can take monthly subscription, yeah, quarterly subscription, yearly subscription. Okay. Can we see spot chart of index and use of TRT indicator? So you can see spot chart of index, but what I prefer is I prefer to apply this on this options chart. Okay. This is chart of Nifty. So it turned red here. This is bearish. After that, prices just kept falling, 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 and till this level, it kept just falling. You can notice it has not given any short entry on retracement in option spot chart. On 15 minutes, it's better. And indices don't work very smoothly. You will see charts work much better in a trend. Indices are highly manipulated, they have very high liquidity, especially Nifty index. Bank Nifty is smooth, but Nifty is manipulated by different sectors. So, as there are different sectors, the chart of Nifty does not move very smoothly. Do we have to close this sell trade before 3:15 p.m. or wait? Will it automatically square off at 3:30? So it can automatically square off at 3:30. We don't have to close it manually if the stop is not hit. From the chart, we can identify the trend and decide we can uh, go for short or buy as 3-minute time frame. Yes, that is the idea. You can check from the charts whether it is going bearish or bullish, and you can, if the spot chart and the options chart is in sync, you can go for those kind of trades. You can see early on, price came down, went up, again it came down, then made a new low, but 83,000 put did not make a new low, uh, did not make a new high. You can also compare it like this by keeping two charts side by side. 83,000 put. See, at this time, what is happening? Nifty is making a lower low, much lower than this low, but this is not making higher high. That is the indication that most likely this is likely to go to zero, because prices, even though a bigger lower low is made, this is not making higher high. When the Nifty makes new low, this should make new high. And I'm checking Nifty chart deliberately because Sensex chart is very bad. So Sensex charts do not correlate much, but these options correlate very well with Nifty chart. Therefore, I am using this type of chart. I am checking Nifty chart with options chart of Sensex. This made a bigger low, it went very lower than this, stronger fall, but at that time, call put is not making a higher high. That is the indication to look for selling opportunity in it. And I prefer not to sell penny stock, penny options like 10 rupees, 20 rupees of Sensex on expiry day. The premium should be higher than 50 rupees, 100 rupees or 200 rupees also is fine when it is in direction of the trend. But if it is against the direction of trend, then it is better to go for lower strikes which are out of the money and around 50 to 100 rupees, not more than 100 rupees for opposite contrarian trades. Okay, even though it is contrarian to the main trend, it is in direction of this options trend. So we have to see call chart during selling part of the trend is way. Yes, I see call chart and put chart both. If we buy 83,000 put and 83,600 call at the same time, what you want to do, you can do. I am not doing that. I just, what I do, I am telling. You can try and experiment. I don't like to buy any options. 25,700 call chart. So 25, okay, you want to say sell together. Selling together is not a good choice because When we are selling this, it is at higher level, whereas call will be at the bottom. It is not in the selling area. So if we check call chart at same time, 83,600 call. What is happening here? This is making new high and this is at the low, right? And stop loss for this is very high. It's not a good stop loss. So I will not do that. If we do this kind of trade, what will happen? We'll sell this at 60, 70 rupees or uh, something around that. And this will be sold at same time around 9 or 9:57, 10 o'clock. So this will be sold around 110 and the stop loss will be, at least you will keep stop loss of 220 because there is no structure there. So this is a swing high which you will use as a stop loss, which I don't like. I want selling area as my stop loss. So if I sell here, I don't know where is my stop loss. When price created this, if I sell here, I know this is my stop loss for sure. If entry is not happening, it's okay. I will not sell here at 90 rupees. Even I'm making 90 rupees, my risk is also 70, 80 rupees, which does not allow me building bigger position size. So if I sell here, the stop loss is 16 rupees, which I will increase to at the most 20, 25 rupees. And I'm getting 90 rupees premium for risk of 25 rupees. It is more than 3 times as compared to risk taken. 25,700 call. So as today is not expiry for Nifty, this trade will not be taken on 25,700 call. Just let's check. So price came down, went up, came down, went up. Then again created a selling area. It did not give entry. This is the time when entry happened. You can notice this is a selling area. 5 rupees is the stop loss. Price came down by 23 rupees. Okay. And after that, trailing stop loss is hit at break even. As it is not expiry, I don't expect this to go to zero. Therefore, I will not wait till this. Here the method is different, but I prefer to trade on expiry days. They give much smoother trades and we can just keep the target as zero. We don't have to bother much. Once a trailing stop loss is, once we get a new trailing stop loss, which is either at break even or below, we don't have to worry at all. Will not have a loss. Okay, any questions in this? So I want two things in favor. Buy should be bearish and trend should be bearish. And when price comes in the selling area, just sell. Stop loss is much, much smaller as compared to any other place where you can sell. Like if you sell here, the stop loss is very big. You can see it is around 233. That means 60 rupees stop loss. So when this candle forms, I will place my order to sell here. That will reduce my stop loss significantly. It will be around 15 rupees stop loss and I can take a bigger position. So for 15 rupees, at the most, I will keep a stop loss of 20 rupees. And if it does not give entry, that is fine. Later on also here, if I get entry, I got 1:3 or 1:4 kind of trade here. For risk of 5 rupees, if I'm getting 23 rupees maximum, and at that time, I will not be able to, definitely not able to book here. I will be able to book somewhere later on. Maybe I will exit somewhere here. Partial profit booking will be done when I see that prices are going up again. At that time, I will do partial profit booking. Do you check IV before selling call or put on expiry? I do not check IV at all. More things I check, more time it will be more time will be wasted, and it does not achieve anything. I can see from the charts if option premiums are very high and they are increasing, that means the IV is high. If the prices are moving very rapidly, that means IV is very high. Here we have to just check two things. One is bias, other is trend. Take entry in the selling area and keep stop loss above that. That's it. Tomorrow will be gap up as per TRT indicator as it turns green candle on 3 minute. I don't know what will happen on tomorrow. What will happen, I don't know. Even though it has turned green, it is still below the bias band. So whether gap up happens or gap down happens, I am not bothered at all. We can use this on stocks also. So you can see this is a bias band. It is bullish. Price went up, came down, nicely gave entry, went up, completed one target. The forces were not strongly bullish here. It was strongly bullish here. Then it went up. So there are the forces have also to be checked, and forces decide whether we are going to keep on holding for bigger move or we have to exit at shorter move at target based approach. That will be discussed gradually. When to use a target based approach, when to keep on holding for bigger targets. Can we gauge gap up or gap down with this indicator? No, it's not possible. This is not a future telling indicator. What we are checking is which is the level where we can get a good entry. And based on that, we decide what action we are going to take. So, because of this huge gap, everything has changed. It will take some time to normalize the chart. Okay. It's going to take some time because of huge gap and because of events. There was budget, there was trade deal news. So because of that, charts are bad now. When you sell on a regular day, how you hedge, secure your sell call put in case of gap up or gap down opening. So if I have taken a trade which is for positional holding, suppose this is a time where I have sold, just for example, and price came down and I'm in good profit. So normally what I do is if I'm in good profit and the volatility is not too high, then I just keep my stop loss and I just keep on holding the position. But if I have to hedge, what I will do is if I have sold, for example, uh, Nifty, if I have sold 25,300 call, then I will buy a strike which is above my stop loss, like 24,450. So 24,450 or 500, that strike of call I will buy. If next day there is a gap up or gap down, there is a big gap up against me, that will give me some protection. It's not 100% protection, but it will give me some protection. If it opens flat, what I will do is I will just exit that call which has bought for protection and keep the stop loss on original position. Gold, silver, Bitcoin, it works very nice on Bitcoin on 35 on 15-minute charts. You can see Bitcoin chart, it turned bearish here. From then it's just falling, falling, falling and falling. Okay. And has it given retracement entries? Let's check. So it turned red here. Okay. It turned red here in this candle and it gave a retracement entry. You can see this is the retracement entry. I'll show you with a bar replay. Right now there is no selling area printed. Okay, everything is green. Then this candle, it is red. So this candle turned red and you can see this red thing, that is the bearish bias band. So price is bullish bias band is not very strong and bearish bias band has started appearing. The momentum is also bearish. Bullish momentum is absent. It's not strong. We have bearish momentum. So this is indicating that prices are bearish. There was sideways price action, which is a distribution schematic, which we are going to discuss during first session. So as this is bearish, what we want to do is sell here. Okay. So if we want to sell here, I will show you. We can place a sell order at 78,130. Okay, limit 78,130. This is the sell limit. Stop loss will be 78,560. Okay, 78,130. Suppose you want to take a trade with two lots. Sell. When the price reaches there, it will take a trade. Seventy-eight 130. Okay. So this did not give an entry. Price went up, it gave entry. Okay. So this triggered the entry. Then what happened? Price came down. It is through the buying area. So when the trend is down, it will just keep going through the selling areas, going through the buying areas. It will not respect buying areas. Now this is new selling area. What I will do is I'll keep my stop loss above this. Okay. There is new selling area. So as soon as there is new selling area, we can shift the stop loss below this. You can notice this selling area was created. It again gave one more entry. This selling area was created. It gave one more entry. So actually it gave one entry here. Then later on again it gave one entry here, one entry here. Total two entries were triggered. One more entry here. Stop loss will be shifted further down. Okay, it went down. So stop loss will be shifted. As it has closed, it is last bar, therefore it is showing closed in profit. But at this time, the position will be like stop loss will be trailed at 71,000. Okay. This is 15-minute time frame. It also works on silver, I'll show you silver chart, silvercapital.com. So preferably use this chart of silver. Okay. So this is international chart. You can see it turned red, but the bias is bullish. So this does not allow selling short. What happened? Prices went up. Again, it turned red, price came down. Okay, so it came down close below this. As it closed below this, it is time to exit if you are holding. After that, it did not give any opportunity to sell short in retracement. But from here, it came, went up, and again it fell down. So it must have given opportunity to sell on lower time frame. Even on lower time frame, I don't see any good selling opportunity. It was here. It went up, gave us selling opportunity, price came down. Okay, so this was a selling opportunity on retracement. Here it did not give any selling opportunities based on 15-minute chart. But the exit signal is very clear. If somebody is holding from here, just exit. Don't keep on holding with hope. Even after exit, even though prices went up, what happened? Ultimately, they fell very rapidly. So sometimes we get a chance to exit at better prices like this, but sometimes it does not give any opportunity and falls like this. So whenever the stop is hit, just exit. Okay. Any questions? I have allowed everyone to unmute. You can unmute and ask question. Yes, you have a question?
Sir, in your previous videos, you had used the bearish bias band as a stop loss. Now you are using the selling area as the stop loss. Does this
Bearish
does
bias
this
band as a stop loss. Okay, I will explain that. In previous indicate today we have described the options trade, right?
yes?
Earlier I had told you about stocks trades, right?
Okay. So we need to have a tighter stop loss with options.
Yeah, so if you are selling an option, like this is an option on 3-minute chart. If you are selling it here at around 130 rupees, okay, how much
Yeah,
is the target? The target is 0.
zero. Yes, expiry.
Yes. So you are at the most you are going to get 130 rupees, 135 rupees.
Mm-hmm.
Okay. At this time, if you keep the stop loss above bias band, where is the bias band? It is here. So from here
320.
up to here, it is 183.
Mm-hmm.
And options have a tendency to go to 0. And when there is a decay, what happens is this. It does not go above the selling area. It has to, means most of the time it just keeps falling. It does
If this
not
was
go.
another day then expiry, then
I will not trade.
okay, okay,
Or else what I will do is I will take 1:2 risk reward and I will do partial profit booking and keep the stop loss.
okay.
Like I said on Nifty options chart, as it is not expiry, it does not go to 0. It went 4 times as compared to risk taken, but ultimately it closed at break even. That is what happens most of the times.
Mm-hmm.
And
Yes, sir.
therefore, I do not keep that as a uh, trending move kind of trade. If I have taken it on 3-minute time frame, I'll do partial profit booking and keep remaining position. So if the day is trending, I will make good profits. If day is non-trending, I will not make much of profit. There are two expiry days. One is for Nifty, one is for Sensex, and on both, same trade can take place. So this is nothing we don't have to think at all. Just repeat same thing. When the price comes in the selling area, sell without thinking. If the bias is also bearish, color of candles is also red. When it touches selling area, just sell. Keep the stop loss, close the system, and go to work. If the stop is hit, you'll already know how much will be the loss. If it does not hit, you know how it will go and go to zero. So even if you don't exit the trade and just check at end of the day, that is fine. But always remember, if you are taking a selling position, so this is 154. If you have kept a stop loss at 155, 160 rupees, always keep a trigger price different and execution price different. So if this is 160, you can keep 170 as your execution price. Okay.
Okay.
Why? Because if there is a slippage, if there is big gap up and rapid move, even in that case, if you are not checking the charts, you are safe because you have kept adequate space for execution. Most of the times, it does not open with a gap up of 10 points or something like that. At the most, it will be executed within 1.5 rupees at the most. If you have kept it as 155 and 170, even then it will get executed at 157, 156, not more than that.
Or we
But
put a
there should be
stop loss
adequate gap.
market order. Or we put a stop loss market order, SLM order.
Stop loss market is not available. If you
Okay.
place a stop loss, has to be a stop loss with some space. You place a trigger order, you place a order to execute. Stop loss market order is not available for options.
And if this was a stock position, then you would consider the bias band as your
Yes.
exit or
So
stop loss.
yes. So I will show it with same example of Cochin ship again. So why I said that we can use a bias band, because the upside has no limit like this, right?
Yes.
It just kept moving higher and higher from this level, 300 rupees to 3000, right? So there is no limit for upside. And you can see strong bullish forces, strong buying forces. There were very strong buying forces, again strong buying forces, again strong buying forces. So when we want to give lot of space for trend to continue, in that case, we need to keep a bigger stop loss. So when bias is also bearish and trend is also down, then we exit full position. Till that time, we do not exit full position. You can see multiple charts. Many times what will happen, color of candle will change to red, but the bias band does not disappear, and bearish bias band has not appeared. So many times color changes to red, closes below this and reverses. That also happens many times. So ultimate final exit is when there is a bearish bias band and red color candle. But if candle closes below bullish bias band, I will exit good chunk, because many times it falls rapidly.
Okay, sir.
Okay.
Yes.
Yeah. TRT plus subscription. So the charges for subscription are rupees 5000 per month. You can message me on my mobile number. The black shadow area, this is the black shadow area. It shows bearish momentum. It is a momentum. It shows that momentum is bearish right now. And when there is a bearish momentum, prices are likely to go down. And when the bias is also bearish, then it's a very strong bearish setup. So when bias band is bullish and momentum band is also bullish, prices are likely to keep going higher and higher. And when bias band is bearish and momentum band is also bearish, prices are likely to keep on going lower and lower. And when the prices rise too much, then we can use these momentum bands as partial exit levels. Once price closes below a momentum band, we can do 50% profit booking, 70% profit booking, like that. So these can be used for those purposes. Okay. I'm going to write down all the rules as well for taking trades based on these. And the bias band was explained, means the bias bands were invented after the book was published. Therefore, I will have to write down something for bias bands that is going to be covered anyways in the course. Yes, Hetal sir, any question?
You trade both in Sensex and Nifty weekly expiry?
Yes, yes. Now Sensex expiry options have very good liquidity, so it's not a problem.
Okay, okay. Thank you.
I have started since few months.
Mm.
Earlier, I was not trading in it because the liquidity was very low.
At that time, Bank Nifty was available.
Yes, yes. After Bank Nifty, this is very good. It has very nice liquidity.
Okay, sir. Thank you.
And the retracement entry in buying area, see, you can see here price went up, came down, gave retracement entry in the buying area. So this is my most preferred entry setup where I want to buy with retracement entry, and you can notice how much it went up. I'm not saying that you can book this much of profit. I'm just showing how much it went up. So for a risk of almost 90 rupees, 85 or 90 rupees, this is 80 rupees risk. It went up by 1050 rupees. Risk reward achieved is very nice. And after that, you can, if you close this position here, even then you are making good profits. So it is around 600 rupees. So if you do partial profit booking, that is also good. So this retracement entry gives best risk reward, and that is my go-to setup most of the times. And I will also explain momentum entries later on during the course. But first, practice this retracement entry. This is very, very important setup. It gives the best risk reward. Retracement entries gives best risk reward. Okay, any questions? Does this work on non-expiry day also? So it works on non-expiry days as well. And sometimes if there is some event or something which leads to a trending day, on those days it gives very nice profits. But I don't use it for buying options. And most of the times it at least gives 1:1, 1:2 very easily. Retracement entry only above bullish band. So retracement entry, whenever I want to take retracement entry, if this bearish bias band is present, that is a strong resistance and it may hamper the results. So it may hit the stop loss. Like here you can see there was a bearish bias band was always present and it went up, gave retracement, but first target was not completed anytime. So that can be a reason for failure. Therefore, unless prices have gone above this bearish bias band, have closed nicely, and unless that bias band has become thinned, unless the bullish bias band has shown its presence, it's likely that stop loss will get hit. But even if this trade is taken and stop is hit, that is fine. Next trade, it gave good profits. We have to identify what are higher probability trades. So whenever it is below bearish bias band, it is lower probability trade. Whenever it is above bearish bias band, above momentum band, it is higher probability trade. When it came down for retracement, it is below this bias band. This is bullish momentum band. This is bearish bias band. It is below all the bands when it came for retracement entry. And bullish momentum band was broken, whereas bearish momentum band has continued up to this. So this failed. It gave retracement entry in the buying area later on. I will show it to you. So this was a buying area. When price reached that buying area, what happened? Already bias is bearish, momentum is also bearish. bullish bias is present and bullish momentum is thin and price is below all the bands. So when price is below all the bands, it's likely to hit the stop loss. It gave some reaction. You can notice there was some buying. It tried to go up, but ultimately hit the stop loss. Yes, if I want to keep on holding for bigger trend, then I use PFI numbers. And when PFI is very high, then it's likely to give good trending move. If the PFI is low, then target based approach. 1:2, 1:3, or first target. We can exit at first target, that kind of approach. So here the PFI is not very big, it's just average. And I also check for PFI candles. So when prices are coming down to buying area, and if there are strong selling PFI candles while coming down like this and this, there are two strong selling PFI candles. This is 8,000, 9,000, 10,000, 8,000. So this is strong selling. This is a strong selling PFI candle. So whenever the prices are coming down with strong selling PFI candles, I prefer not to buy. If it just comes down with one candle, and then that candle size broken, then it comes down slowly and creates a double bottom at the buying area, that can be a good opportunity to buy. Okay, that's it for tonight. Any questions are welcome. You can also ask in the group. We'll end the session here. Thank you all. Good night.
Right.
Thank you, sir. Good night.
What is PFI candle? Yeah, good night. PFI will be described later on during the course.